balance is what we want to do. This is a question. So this is prepare. These are balances from ledger, extracted from ledger. All the balance brought down, balance brought down, balance brought down, balance brought down. So we now have to now post everything on trial balance. And if you recall, we told you about what trial balance is. That is a statement that lists the balances of all general ledger, all the balances we found in those ledger we've made, all those balances. It's a statement that lists it all. It lists it all. And it tests the arithmetic accuracy of the account. It tests it. It tests arithmetic accuracy of the account. That means what we have at the debit side, well, after doing our trial balance, must be the same at the credit side. So if you post this, what we have, all those transactions at the debit side must be the same amount at the credit side. So if there's discrepancy, it means there is an error somewhere. It means there must have been an error somewhere. And I gave you a format of trial balance. That's why I put this one here as a reminder. I gave you a format that any transaction that you can see that is assets, like motor vehicle, land and machinery, land and building, cash and everything, anything assets, just put it at the debit side of trial balance. If it is liability, like loan, like creditor, all those ones are liability, you put it at the credit side. Anything that is expenses, that when you see the transaction, you know it's an expenses, you just put it at the debit side. That's just the principle. And anything that is capital or equity, you put it at the credit side. Any transaction that it is sales or income, also be at the credit side. So that's to tell you that assets and expenses will be at the debit side, whereas liability, capital or equity, or sales or income will be at the debit side. Now let's prepare the trial balance for this. So we'll take it one by one. Trial balance. So let's draw the table for trial balance. There's a table for it. So you have your credit, you have your debit, particulars. So first one says purchases 50,125. 50,125. So because of purchases will be at the debit side. So purchase is not an asset, it's not a liability, it's part of, you can say it's more or less part of the cost of sales. Cost of sales. So anything cost of sales. So it will be more or less like expenses, but not really expenses, but it's part of cost of sales. So our first transaction, which is purchases, we have 50,000 will be at the debit side. 50,000, 1, 2, 5. Capital. As you can see from the format, anything capital or equity will be at the credit side. So our next transaction, capital 20,500. Capital 20,500. 20,500. Return outward. As I've said, that when goods, if you are returning outward, it means that when you purchase some good and you discover that the goods are not good, or it's not what you ordered for, you return it. First of all, you purchase it. And you can see purchase is on the debit side. So when you are returning it, it means it will be at the opposite end of it. So you are returning the goods back because it's no more, it's not what you needed, or maybe asphalt or something like that. So return outward. So if purchases is on debit side, return outward will be on the credit side. Goods return from the purchases, so you return some goods out of the purchases, return outward. 170 naira. 170 naira. Land and building, 7,000. Land and building is an asset. An asset will always be at the debit side. So land and building, 7,000. Loan. Loan is not an asset. Loan is not an expensive, but loan is a liability. Loan is classified under liability, long-term liability. So loan, you took a loan. It's not your money. Someone else's money you use in the business, so it's a liability to you. You have to pay it back. So the liability is going to be at the credit side, 16,000 naira. Stationery. Stationery, that's one of the things you use for the day-to-day activity of your business. So it's an expense. It's an expense. So loan is an expense account. Stationery. Stationery amount is 630. Is an expenses. So you put it at the debit side. Drawings. Also drawings that we have, 90 naira. So the drawings too is an expenses also. Spent it, 90 naira. Insurance, also an expenses too, which is 470. Insurance, 470. Advertisement, 210, also an expenses. 210 naira. We have debtors. Debtors, that's those that are owing you. Those that are owing you is an asset also. Is an asset. Those that are owing you, current assets. When we talk about balance sheet, we explain better on all these things. Debtors, 5,000 naira. So it's an asset, it comes to the debit side. Carriage outward. Carriage outward. Carriage outward means that those when you make sale and you want to go and deliver to your customer, maybe the cost of transportation and everything. So it's an expenses also. It's an expense, so it does carry outward. So that means for you to be able to deliver that sales to the goods to your customer, all the expenses you made, is also an expense also. So which is carried outward. Carried outward. 110 naira. Motor vehicle. Motor vehicle is an asset, so it has to be on the debit side. Motor vehicle. Motor vehicle, 1,025 naira. Machinery is also an asset. Fixed asset is also an asset, so you put also machinery. $12,140. Creditor, those who you owe, is also a liability. Those who you owe is also a liability. So liability will be at the credit side. Creditor, those who you are owing that you need to pay them. So 7,000 naira, it has to be at the credit side. To be at the credit side. Fixture and fitting is an asset. What you use in your office, furniture fittings and fixtures and fittings and everything. Fixtures and fittings. 19,915. Return outward, as I've said too, as we have the return inward, so we also have return as we have the return outward, we also have return inward. That means those sales that we made, and maybe because of faults or thereabouts, they return it to you. So if sales is at the credit side, it means this will be the opposite of it, return inward. So it will be at the debit side also, return inward. 3, 6, 5. So the goods that were returned back to you. Discount allowed is next. If you allow discounts, it's an expenses on you. You give someone discount, you're supposed to collect 100 naira for that product, but you collected 95 naira. The remaining 55 naira will be an expenses to you. You will bear it. You are going to bear that one. So it's an expenses to you. So you bear the cost. Discount allowed. 80 naira. Rent is an expense. You pay rent for your office or for your shop. So it's an expenses also. Rent 130. Commission received. Yes, this is an income. Commission receivable. You receive a commission for something that you have done. So money has come in. So that's an income. That is an income. So any income will be at the credit side. Commission receivable. For how much? 700 naira. General expenses is already an expenses. $1,130. Sales and income will always be at the credit side. Sales 70,500. Equipment is an asset. Equipment is an asset. 16,000 naira. Discounts received. So discounts received. You receive discounts. That's another income that comes to you. So discounts received. So it's an income to you. You receive the discount. It's an income to you, 300 naira. So every income will be at the credit side. And lastly, salary. Salary is an expenses. $750. So let's now look at the total of it all. Let's look at the total of it all. Let's look at the total. Let's bring our calculator and start calculating how it goes. $50,125 plus 7,000 plus 630 plus 90 plus 470 plus 210 plus 5,000 plus 110 plus 1025 plus 12,140 plus 19,915 plus 365 plus 80 plus 130 plus 1,130 plus 16,000 plus 750. We have 115,170. So that's what we get on the debit side. Then on the credit side, we have 20,500 plus 170 plus 16,000 plus 7,000 plus 700 plus 70,500 plus 300. Also get 115,170. So this is just what trial balance tells you, that the amount in the debit side must be equal to that of the credit side. What you get in the debit side must be equal to what you get in the credit side. And from here, when you discover that your balance are correct, it takes you to the next level, doing the final account, that is the trading profit and loss account and your balance sheet. It takes you straight to the trading profit and loss account and your balance sheet. So when you are doing your trial balance, just note this principle. Every asset must be on the debit side. Anything liability, your loan, your overdraft, your creditor, will be at the credit side. Anything expenses, your debit side, either capital or your equity will be at the credit side. Your sales or income will have the discount received and income, commission received, these are income. Your sales, the normal sales you make, they will be at the credit side. So before we move to the final account, so we shall look at bank reconciliation statement next.